Hey everyone, Matthew here. Today I'm going to talk to you why I'm loading up on Meta shares today. Meta Platforms, Meta stock, formerly known as Facebook, and what the business is doing. We're going to look at valuation trends. We're going to look at what their most recent earnings guidance has come out to be for the next quarter, if not the next year. And we're going to look at the upcoming capital expenditure wave of all of this going together to build a bullish case. Now, if you like simplified and up to market tech stocks like this and deep dives on stocks, make sure that you're following for more. Subscribe to the channel, leave a like, let's get right into it. Now, here's what Meta actually is and why I like it. Meta owns a massive ecosystem. Formerly, they were Facebook, and they have other companies like Instagram, WhatsApp, Messenger, and all of these other reasons to get into here, like Threads too. If you know Threads, it's essentially a Twitter, but for Meta's company. It has scale. Businesses really want users and attention and get these monthly active users to generate ad revenue from them. Meta has a user base that has so many people onto it already, and this advertising stack is going to just stack higher and higher throughout the years as they gain more users. Meta's really doubling down on AI. Meta sees a future, not just advertising, but an AI powered experience with infrastructure and more monetization. You could see that in the past couple of years, if not the past couple of decades, they've made pretty big acquisitions, and they've acquired WhatsApp, Oculus, Instagram, all of these specific companies to grow the overall business. They are putting that money back into the business, buying other companies, making sure that the value that they're getting from these companies is actually going to be extracted so they can earn a bunch of money. And all of this is going to go to free cash flows that's going to lead down to the bottom line and increase the stock price overall. Now, Meta's core business is profitable and it is cash flowing. Now, there's relatively stable companies within this entire platform, but there are some speculative plays like Reality Labs. They're losing a bunch of money every single quarter on just this, but there's other reasons to own the stock too, because it generates a crap ton of money. So for me, it's not a pure bet on the far future. It's not like some kind of moonshot. I think Meta as a business already has a strong foundation. Plus, you get the optional upside of potential AI and infrastructure and all of these new augmented reality capabilities that are brought to the business here. Hopefully, the Meta glasses are going to take off, and that's going to be the next big thing. As a Meta shareholder, that's what you would wish, and you hope that these AI related projects are going to pay off because so much capital expenditure is going into them, which we will look into. Now, as for the recent earnings and capital expenditure guidance, in Q3 of 2025, we saw that Meta reported a revenue growth of 26% year over year. Now, this was pretty outstanding for a company like Meta. As for guidance, Q4 2025, they expect revenue to be anywhere between $56 to $59 billion. And for the full year of 2025, they expect total expenses in the $116 to $118 billion range. And capital expenditures, including that finance lease payments, they expect that to be in the range of $70 to $72 billion. More importantly, in 2026, they're projecting for a much higher infrastructure slash AI spending, and they think that capital expenditure is trending, perhaps 90 to $100 billion plus, according to some other reports, and this is going to support their build out. In the past, they've always under forecasted capital expenditure spend when it comes to these AI projects, but now they want to be more accurate, so they're going to guide for a higher number here, which is probably why the street didn't like it and why the stock sold off 13% in one day, which makes it an extremely appetizing buying opportunity, in my opinion. So the entire narrative is there's strong ad growth, there is a core business that is still strong, there's big investments for the future in the growth of this company, and people are selling off the stock. Now, if you can see here, there's this massive drop off in Meta stock here. It used to be $750 and it's dropped $100 to $650 about. And this is an insane amount to lose within a couple of days of an earnings report. Now, I typically look at these kind of opportunities and really try to understand, why did the business sell off? What are the catalysts as to why people don't want to own the shares anymore? And I've really found that It comes down to two things: a massive loss in net income, which is explained by accounting that we'll get into, and two, just higher capital expenditure in the next year for AI build out. Is that something you should really be scared of? Let's break it down. Now, if you look at the earnings of Meta, you could see that the net income dropped 82%. And this is pretty alarming for many investors that don't really know or haven't taken a glance to really dive into the company. So, part of the reason that Meta Q3 earnings had seen a sharp decline is because there was a $16 billion tax charge due to Trump's big, beautiful bill. And essentially, what this is due to the law, the big beautiful bill, Meta has to take a valuation allowance, or they have to write down the US federal deferred tax assets, which really means that it reduced the value of its tax benefits and expectations for the future years. Essentially, in the future, they were going to be getting a tax savings, but now they have to take a short-term tax hit when it comes to the P&L. Although it is non-cash, it is a one-time item and it flows through the income statement, and this really just cuts into the net income of this quarter only. But the simple story with Meta stock is that their revenues are not declining. The business is still growing at 26% year over year, but this quarter Meta just took that one-time huge tax charge that's billions of dollars tied to a new law and this tax change with the big beautiful bill. And because of this change, the net income is essentially dropping. EPS has dropped about 82%, which really looks like a huge plunge. And it did really just plunge. But that is really due to accounting. The underlying business is still doing okay. We shouldn't be worried due to these tax accounting things that happen in the back end. We should just be worried about the front end and what's happening with the business, and are the segments growing, are users growing, and are they able to drive value back into this business rather than a one-time thing. So in short, I think the business is doing very well, but surprises are pretty bad. Now, in the future, they don't expect any of this tax bill to come again. This is just more of like a one-time thing to set them up, and in the future, the tax payments will be lower. Now, if you look at the valuation of Meta, it's really not that bad. $1.6 trillion in market cap with a bunch of money getting returned back to shareholders. Like this is a 22 return on invested capital, 18% return on assets, 32% return on equity. All of that growth for the price of a 28 price to earnings ratio. Now, this is actually not too bad given that they're growing top line at 26%, forward basis at a 22. This is probably the cheapest stock in the Mag 7. You cannot beat this when it comes to buying a stock, getting growth at a very reasonable price. You are getting all of this growth that comes with Meta for a 22 forward PE. This is unheard of. It is a gift that we're getting today. To get the amount of growth that you get with Meta, a extremely stable company that is going to have really great fundamentals, a great future outlook, and for the price of a 22, that is insane. As well as a price to operating cash flow of 15. If you look at any of the other Mag 7, you're probably going to see anywhere between a 19 to 25, and on the high side, probably like a 60-ish for other companies. Now, if you look at this business, you can see that the revenues are just up and straight to the right. Net income is up straight to the right, excluding this last quarter where, we took an 82% loss, but accounting rules. Free cash flows have been dropping a little bit due to the reason that they are investing extremely heavily into AI infrastructure, and they do want to one day turn this back to profitability. And let's say it doesn't work and they turn off all this AI capex spend. This company will still generate cash on hand, cash repetitively, and it is an extremely strong business to own. I would love for them to give this money back to shareholders in the form of anywhere. Okay, I'm happy for them to take this bet on AI, and if it does work and they are able to return so much more value back to the shareholders, do it, because it is a great growth company at the end of the day. Growing top line is 26%, mind you. So hopefully these projects do work out, but if not, and they do want to turn off this capital expenditure spending, their free cash flows are going to shoot up to the moon. This is going to be a very extremely profitable company that anybody would want to be part of. I would want to be part of it. They used to be at 2.9 billion shares, and today they are at 2.5 billion shares. So they've been able to cut down on a lot of the shares that are out there and buy back, return that value back to the shareholders. But if you do value this company, you might want to just look at operating cash flows, see like what's going to happen with the operating cash flows. So far, like in the past year or two, they've been trading anywhere between like a 16, 17, anywhere between there. Currently, you're getting a 15. So in relation to the past 2 years, this is actually under the valuation where it usually trades at, where it used to trade at. Though the past isn't how we should intend for the future to look like. This is just a baseline of like where are they trading in relative to where they've been trading in the past, which is kind of interesting to pick up here. Now, if you use a discounted free cash flow model here, you can just put in these inputs here, right? Like free cash flow, I think they're going to grow around 18%. In the past 5 years, they've been growing 18%. If all of these projects actually pay out that add free cash flow, this will shoot up higher. If they stop spending on capital expenditures, this will shoot up even higher than that. So it is a great free cash flow growth that we have here. 18. We're going to go with 18. Share growth in the next 5 years, I believe they will buy back their shares at a 2% clip, which is reasonable. They've been buying their shares back at about 2.5%. So we're going to go with 2%. Price of free cash flow, currently they're at 36, and I think it's going to trade anywhere between, let's say, a 30. I think it's very reasonable to give a price of free cash flow of 30 for a company like Meta, where you're growing top lines at what, 26, and you're growing bottom lines at previously 60% in the previous year. So it is a great company that is going to be given the valuation once it gets re-rated. Our target rate of return is about 10% for the stock, and we can see that this calculator does spit out a fair value today of 30% higher than where it is trading at. The fair value today should be at 841, and in 5 years, I wouldn't be surprised if this company is $1,000 plus. Of course, these are very, I don't know, maybe higher estimates, but let's say free cash flow just grows at a 10% clip. Today, it is worth $592. It's an 8% down from where it is today, but in the future, in 5 years, it should be worth 47% higher. I don't know if 10% is actually the number, but maybe we can go 15%. 15% gives us a 14% up gap to make up here in value. Well, in 5 years, it should be about $1,000. I wouldn't be surprised if Meta hits $1,000 sooner than that. Just truthfully speaking, I would not be surprised. That Meta is a stellar company that is going to be one of the changers in the world, and I wouldn't be surprised if this is a top 3 company one day in terms of market capitalization. Now you can see here that the average revenue per user has been increasing at 17%. These are the unit economics that just drive Meta to become a stronger company. The family daily active users, this is their entire system economy of apps. These have been growing at 7% year over year. That is a great amount of growth, and we love to see that for any software company that is trying to grow active users along the platform. Advertising still have very strong strength here, 25%. Reality Labs, they usually just throw money away. Like in Reality Labs, it's a money pit, but their revenues have been increasing at 74% year over year. Payments and other have been growing at about 58%. Now, these are smaller numbers, given that these are not even $1 billion yet in the millions. So these are on a smaller scale, which is why we can see these insane growth rates. But family of apps, everyone, all the users on these platforms of apps, whether that be WhatsApp, Oculus, or actually not even Oculus, WhatsApp, Instagram, Threads, these are all growing at 14%. And we can see that the biggest driver this quarter and every single quarter even has been the rest of the world growth. This is about $10 billion. And it seems that the rest of the world wants to use Meta. They want to use Meta apps. They want to get on the Meta platforms and really just be a part of the social media. If there is one thing that people want, it's probably WhatsApp. And once we are able to monetize WhatsApp, you have this app that connects so many people around the world to communicate with each other. And once they're able to communicate with each other, then that is how they will stay sticky to the platform. It's already sticky enough. They just need to find out how to monetize WhatsApp. And once they do, you already have so many users on it. There's maybe an ad a day or some hidden in the background or targeted ads where you You just show somebody some specific things that they would like to see. But if you can monetize WhatsApp, that is the money creator, the money generation, because there's so many users on that app, but it is not yet monetized. Now, as for their balance sheet, they have about $44 billion in cash and short-term investments here. I really want to look at their current debt and see if they could actually cover all of these, liabilities that they have here that they might be able to, just pay off right away. The current liabilities is about $36 billion. Now, with $44 billion of short-term capital cash here that they have, they will be able to pay this off in an instant. Their current ratio is about 2, I believe. So this is a very financially healthy company that is not going to go under. Of course, it is the Mag 7, so you probably don't even need to look at it that deeply. But in case anybody was wondering, it is a very safe company in terms of their solvency, and they will not go under anytime soon, in my opinion. And of course, paying that 22 forward PE, I believe, is a ridiculous amount to pay for this company in terms of a good way. In relation to all of Mag 7, I think this is the best value for the amount of growth that you're getting here, and I really like Meta. Now, here's my Meta position. It is a current value of about $13,000 here, and I'm down about $350 so far. My total gain loss is -2.5% because I've been buying this and it's been kind of dropping the past couple of days. Now, I think I got in at a decent time. I wouldn't be surprised if it does drop a little bit more or it does rise from here. You never know with the stock, but I do hope it does drop a lot more so I could deploy some of the cash that I have into this stock here. I bought it at about $665. Today it's about $648. And I really like Meta as a whole. Like, the resilient core business of Meta is not going to be disrupted. Their ad engine is going to keep driving that strong cash flow, which gives me comfort. I really like what they are doing here. The AI and infrastructure optionality with Meta is investing extremely heavily into these projects right now. I believe these investments could take years or a couple of quarters, if we're lucky, to unlock higher growth. But in the next couple of years, let's say 2026 to 2028, I think it will potentially pay off. If it does pay off, we could see an upside beyond just this modest growth expectation that they've been doing already. There's a valuation buffer with Meta. I believe that because of the market is concerned about how heavy capital expenditures are going to be in the future and the rising expenses, there's going to be some near-term uncertainty or anxiety with investors that are already built in. I see this as an opportunity for me to go buy more. And if it does drop, I do want to build Meta to a very large position in my portfolio. A large term orientation with the stock, I think that I'm comfortable with a spend now, harvest later kind of approach because the core ad business covers a lot of ground and there's going to be a lot of margin pressure if there is not AI spend ROIs, but I can tolerate margin pressures for now if it doesn't mean that they're sacrificing their moats and are going to significantly hinder the business. And for my downside protection, even if the upside from AI doesn't fully materialize, I do think that the ad business and the user base floor is really this entire investment here. In other words, there's going to be moderate risk and a potential good upside, in my opinion. I think the core business alone, without any of this AI infrastructure, is worth what I'm paying today. So any of the extra is just a cherry on top. And if we hit, we hit. And if it does, I and many shareholders will be extremely, extremely happy. But there's a lot of risks that come with Meta if you're going to be a shareholder. There's going to be huge capital expenditure that I've already mentioned, and you run the risk of what if Meta's ROI isn't there? What if they don't get these ROI from these specific projects and they are just throwing money into a fire pit at the end of the day? That is one risk that you have there. What if advertising headwinds increase? There's macro weakness with privacy and more competition from, let's say, another competitor like TikTok that might actually hurt ad revenues and execution. Will Zuckerberg, a green lizard Brazilian jiu-jitsu guy, come in and scale the business that is going to be AI, reality labs, all of this? It's going to be hard to forecast all of this with a great amount of timeline to give to shareholders. The guidance isn't extremely transparent right now. Like, we don't really know what's going to happen in terms of what the payout is going to be, where they're going to specifically place all of these dollars. And of course, there's always regulatory or legal risk with any data company or social media company, there's privacy issues, there's antitrust regulation, there's global regulatory environment. So these are the risks with your investment if you're investing in Meta. Valuation. Some people actually think that the share price is going to be reflecting a much lower price in the future, given that the growth expectation isn't going to be as what people think. People think that Meta is a dying business. When you think of Meta, you think of Facebook. And people think, oh, Facebook, my grandma is on there. So why are they growing at 26%? And why can we expect them to keep growing at 26%? No, it's because they have Instagram and WhatsApp and Oculus and this entire platform of apps that you want to be on. And they have Llama. It is a great company that I want to be part of, in which I will keep buying. So my investment horizon is going to be 3 to 5 years down the line. I really want to own more of this business. I really want to make sure that I buy in chunks. I average in. I don't know if I timed the bottom here. I will never know if I timed the bottom. But given that there's so much uncertainty, maybe this stock can drop a lot more, a little bit more. And I'll be excited to bring this position, hopefully to a $20,000 plus position. And I'll keep watching to see in the next couple of quarters, will they increase revenues? Will they increase growth in AI production? All of these moonshot things that they're going after. It's a super exciting place to be right now. And if you are interested in hearing all of this new stock analysis, I want to hear from you. Do you think that Meta's AI infrastructure is going to be a great push, or are you bullish? Are you cautious? What are your thoughts on Meta alone? Let me know in the comments. And if you found this breakdown helpful, make sure that you hit the like button and subscribe to the channel because we are growing so fast here. Thank you guys so much. Have a great day and peace out. I'll catch you in the next one.